In this video here, we're going to be breaking down Micron Technologies. Now, I covered this company a couple of months ago. It's a huge holding of Mohnish Pabrai. He owns a lot of shares of this business, and it makes up, I think, 90% of his portfolio after he sold out of his other holding of another company. Anyways, enough of my blabbering. We're going to load this up in the stock research tool, folks, and we're going to go through the financial strengths of this business. And finally, later on in the video, we're going to be doing a price analysis to determine what a fair price to pay for this business would be. So here is my own software, and what this category here labeled financial valuations, it takes a look at the balance sheet, the income statements, as well as the cash flow statements to grade the company out of 10. Now with Micron Technology, we are grading this an 8 out of 10, so that's a pretty strong score. So let's go through what these 10 categories are and figure out what this company is doing well and what it's not doing so great. So with our first category here, we have a 5-year PE average of 10.50. That's really good. It's really low. We're looking for companies that have a PE ratio underneath 22.5 because we don't want to be overpaying for growth unless it is justified. We can also just cross-reference this with our company metrics, which also takes the 5-year PE averages and metrics such as what we have over here and compares it to the trailing 12 months. So Micron is trading an incredibly low PE ratio for a tech company. That is pretty uncommon. So we're going to get a point there. We got Greene across the board, folks. Current ratio is incredibly high, sitting at 3.11. We want to see this number over 1.5. That means they have enough assets on hand to cover their liabilities. So our return on equity average is sitting at 21.78. That is great. We want to see that number over 15%. And as well as in our trailing 12 months category, we have that sitting at 20. So great points there for Micron. Our EPS growth, if we take a look at this, huge growth here, sitting at 423% increase, massive increase here. So if you're a shareholder currently of Micron and they're bringing in more earnings, you're getting more bang for your buck on the shares that you have. Last but not least, in this section of the categories, in these 5 categories, we're looking at debt to equity. Now this is sitting at 16.22%. I don't know why I say that. 16.22%. Folks, we want to see this number under 50%. It being that low is incredibly valuable to the business because that means they are growing the business through equity and not through debt. We want to see companies taking on equity to build this business and not being strangled by creditors. So in good times, this is phenomenal. In bad times, this is even better because when bad times eventually happen, creditors won't be at the necks of Micron saying, hey, we've lent you this money, now pay us back, if in case business does slow down. Huge win over here. So Greene across the board, looking great. Now on the next 5 categories, we're losing in 2 boxes: share dilution and 5-year free cash flow growth. Share dilution is very minuscule. We're just slightly being diluted at 0.90. Now, it's not the worst dilution. However, they're diluting you nonetheless. We want to see this number staying the same or decreasing because that would mean to us as shareholders that we have essentially a larger piece of the pie. Now, with our 5-year free cash flow growth, we are down. We are down a lot, 28%. Now, I'm going to just load the cash flow statement up. Take a look at our free cash flow, and so here's the thing. So now that we go into the free cash flow statements, we can see what the story is. We can see what's going on, and it's been a little bit of a bumpy ride. Taking it from 2017 here at 3.42 billion, we went up in 2018 by a considerable amount, down in 2019, and wow. We've had some negative years as well in 2016, and now we're up again in 2021. However, it is a slight decrease from our 2017 year. We ideally, folks, we want to see companies that have a steady increasing free cash flow. We want to see steady movements. That's what we're looking for. However, with Micron, it seems like it's a little bit of a bumpy ride. So that's going to be a concern definitely to keep in the back of my mind. Now, However, where they are going to earn some major points is through our net income growth. It's pretty strong, 15% increase, high return on invested capital average, sitting at 19%. We want to see this number to be 10% or higher. 20% is phenomenal. 5-year revenue growth is at 22.26%. Amazing growth for a $78 billion company. This is good. This is great to see that they're able to grow that amount. Now, let me just go into the income statement just to see what that looks like. And we can see, well, you know what? It's still up and down growth, but it's not as fluctuating as much, doesn't have as much fluctuation as our free cash flow statements. So with Micron, I'm very impressed by these numbers. I gotta say, these numbers are very, very impressive. I wanted to cover this company again because I've noticed that the price has been decreasing over the last little bit since I last covered it. So sitting at these prices here is somewhat attractive. We'll find out what that actually means once we do a price analysis. But just jumping in here before we do that, Piotrowski score is sitting at a 7. Now the highest number we can possibly achieve is 9, and we want to see companies that are hovering between 7 and 9. So that's a pretty decent metric to see. Almond Z score sitting at 5.19. Now that, folks, is incredibly high. That means they are safe relatively from going bankrupt. In bad times, we would know that Micron is in a fairly strong position financially. Now, folks, we are going to jump into a price analysis. But before we do that, folks, if you're enjoying the video so far, hit the like button and hit the subscribe button. Now, this software here that I have in front of me will be an app for you to use. It helps me screen companies incredibly quick and understand in an instant what is actually going on within the business. It gives you access to the income statements, the cash flow statements, the balance sheets, and much more is on the way. And you're able to see what a business is doing within a snapshot. So now, without further ado, we're going to jump into a price analysis. And now what I do with this category here is I input assumptions, what I think the companies will do over the next, well, I can do 1 to 20 years. So I like to stick to 10 years because I feel like this is a fair evaluation, and I believe Micron will be bigger and better in 10 years to come. I'm going to fill out these boxes, and then we'll go over why I did what I did and figure out what a fair price to pay for this business would be. So stay tuned. All right, folks, so here's what I did. Taking a look at my numbers here, I did conservative, moderate, and aggressive. Now, I put a margin of safety on all of these numbers here because I want to see them crush my numbers. I want to see them do way better than what I currently have on the board. However, I do want to give myself some slack in case they don't. So I want to be able to pay for this company at a decent margin. So with our revenue growth, I've cut it down a little bit by going 15, 16, and 17%, even though I know they have done 19, 22, and 29, right? Now, if our numbers hit over here and end up, let's say, crushing revenue growth numbers, let's say at 22 or even 19%, that works out in our favor. So with that in mind, I kept things at a little bit of a slight discount with a profit margin sticking around the 22 to 22.5 range based off our 5-year numbers we got here. Cash flow margin, same thing. Price to free cash flow, I hovered around this 16 number, so put 16 in the middle, 14 on the low side, 18 on the high side, and a PE ratio of 8, 9, and 10 because our 5-year average PE ratio is 10.50 and our current PE ratio is 8.67. So I feel like if we're able to hit these numbers at this PE ratio, it'd give us a pretty accurate representation of what this company should be at. Now, desired return, let's say we do lucky number 13. Guys, look at this. Green across the board here. Sitting at $128, folks. Look, there is, I'm loving this. This is great because it is clearly evident of why Mohnish Pabrai has constantly doubled and tripled and quadrupled down on this business. Take a look at these numbers, folks. Sitting at 15% revenue growth, while our DCF calculations are sitting like at, look at that, 80 80.94. Comes out to an average of 98.30. So essentially, if you believe these numbers here, folks, getting a 13% return, you'd have to pay a minimum of $98. Currently, we're sitting at $70. And with interest rates rising, folks, with interest rates rising, you'll see a lot of tech companies they will get hit. That's just the nature of the beast. A lot of these tech companies are going to get hit. And in our 52-week range, we were sitting at $98 on the high side. 98 on the high side. And now we've hit a low of 65. We're currently at 69. This is looking very, very attractive. Double. Our average is double of pretty much what we currently have right now, folks. So is Micron a buy? By these metrics, yes, it is. Now, does that mean go out and buy it? No, it doesn't. You have to do your own due diligence. There's a lot of other work to be done. This is my opinion. You have to go into the management team, see what's going on with them, see what's in the pipeline, what do they have coming up next. From a price perspective, from a financial strength perspective, everything looks great. Everything looks great based off what my software is providing me. Now, but the other thing that lingers, as I was mentioning earlier on in the video, in the back of my mind, our free cash flow, the bumpy ride that's going on over there, that requires some investigating. With this numerics in mind, it is something to keep on the watch list to see if it makes sense. Now, if you are a person that has been investigating this company for quite some time, please comment down below what your thoughts are. To me, from a financial perspective, this makes sense to buy, and it honestly just reaffirms why Mohnish Pabrai is so head over heels for this business. So, folks, that's the video. List a company, or write down a company down below in the comment box below of a company you want to see evaluated. I will run it through my software and put some assumptions on it. And let me know what you think about this software here. It's going to be coming out soon. It's going to be an app for you to use. And I can't wait to share it with the community. It's going to be great. So, that in mind, folks, thank you so much for watching. I will see you in the next video. Until next time.